Welcome to another video. Are you an entrepreneur or an accounting student who would like to better understand how sales taxes work? If you are, this video is for you. So today's video is a tax topic, more specifically sales taxes. I'll be uploading a QuickBooks video on sales taxes in the near future, but the purpose of this video is just to provide some general info about sales taxes. Specifically, we'll be looking at and answering 7 questions. What are taxable, zero-rated, and exempt supplies? Who needs to file sales taxes? When are sales taxes due? What happens if you do not pay your sales taxes? What are ITCs? Who can file sales taxes? And finally, how do you calculate sales taxes? Taxable supplies are defined as most goods and services in Canada at 5% or more, depending on the province. So we'll look at the different rates in a second. It does not include exempt supplies. So therefore, it does include zero-rated supplies, which are taxable supplies subject to a rate of 0% of sales. They're included in the total of taxable supplies in order to determine the threshold for the total of taxable supplies. And we'll be looking at that in an upcoming slide. So examples of zero-rated supplies are basic groceries, such as milk, bread, and fresh produce, prescription drugs, some medical devices, glasses, hearing aids, and many transportation services where the origin of destination is not in Canada. Then the third category, which we have, is exempt supplies. So this is basically items that are free from tax. So they include most health and dental service, childcare services, and that's for children that are under the age of 15, residential rental accommodation, sales, and residential accommodations are for rentals for over a month. So for instance, a hotel, if you're staying at a hotel, there would be sales taxes that are applied to whatever the fees are. Sales of used residence, residential condominium fees, insurance, there's never any tax on that, education, and legal aid and financial services. In a later slide, I'll be talking about who can file sales taxes. In this slide, I'm talking about who needs to file sales taxes, because there are businesses that are absolutely required to sign up and register for sales taxes, while there are other businesses that may not need to register for sales taxes, but they might have an incentive to do so. But for the moment, we're concentrating on who has to absolutely register for sales taxes. And the answer to that question is, in short, most businesses that have more than $30,000 in sales around the span of 1 year. So there's a more specific answer. And the more specific answer and the more technical answer is the ones that need to register for sales taxes are businesses that are not small suppliers. That is, businesses that sell less than $30,000 of taxable supplies within 4 consecutive quarters. We're going to look at how that works exactly with a real example. And the date that these businesses are required to begin collecting is the first day of the second month following the end of the calendar quarter in which the $30,000 limit was exceeded, and the requirement to formally register is within 29 days of the first day of the second month following the end of the calendar quarter in which the $30,000 limit was exceeded. So I'm giving you the actual definition from basically the CRA, but we'll be looking at an example which will make this a lot clearer in just a second. Okay, so the purpose of this is to illustrate how the $30,000 4 consecutive quarter threshold basically works. So let's assume that we have a business. We can call this ABC Inc. And they have quarterly sales of amounts shown in column D. Column C, we have the period for each quarter. So if we look at the first 4 consecutive quarters, let me calculate that right now. We basically have $19,000 in sales. So that means they're still considered or deemed to be a small supplier. So let's look at the next threshold, which is Q2 year one to basically Q1 year two. So this section right here. Now what we see is the total for Q2 year one to Q1 year two is $30,500. That means that now this business would no longer be considered a small supplier, and therefore they should be registering and collecting sales taxes. So if we were looking at those very hard to understand definitions from the previous slide, the business is now required to collect the GST on all sales made starting May 1st, year two. So that's basically the first day of the second month after the January to March quarter. So this quarter ending right here that I'm highlighting in, let's highlight it in green. And the business must become a GST registrant by the end of the day on May 30th, which is within 29 days of May 1st. To answer the question, when are sales taxes due, I created the picture that you see on the slide, and it depends entirely on the total taxable supplies of the business, basically their sales. So if we're talking about a much larger business that say has more than $6 million in sales, they'll be required to file on a monthly basis, and the deadline to file will be 1 month after the reporting period. A reporting period would always be on the last day of the month. So for instance, let's say they have a reporting period that's ending, now we're in the month of April, so say it ended on March 31st, well, they'll be required to file, their deadline will be April 30th, 1 month after March 31st. Now, for companies that have more than 1.5 million up to 6 million in taxable supplies, they must report quarterly, and their deadline to file is the same 1 month after the reporting period. The third category now, companies that have 1.5 million or less can report annually, and their deadline to file is 3 months after the reporting period. The only thing that I want to make note of here is that for the middle situation and the third category, those companies can choose to also report on a more frequent basis. The middle category can choose to report monthly if it wanted, and the reason why it might want to do that is just for cash flow issues. They might determine that they will likely be receiving tax refunds, and therefore they're going to want to basically do this on a more frequent basis so that they can get the money faster. And we're going to be taking a look at situations where companies are not necessarily required to register for sales taxes, but they do so anyways. What happens if you do not pay your sales taxes? Very simple, just like with your income taxes, penalties, and interest. What are ITCs? ITCs are basically an abbreviation for input tax credits, which is basically the amounts of money that you have paid when your vendors or suppliers have invoiced you. So for instance, say your vendor or supplier invoiced you $100 for some kind of product or service they provided. You ended up paying, let's just say the 5% GST was applied, $5 worth of sales tax. That $5 that you paid can be refunded to you. So that means that net sales taxes are basically the sales taxes that are owed to you less the ITCs, which are receivable. Before we looked at who must file sales taxes, now we're going to look at who can. So even though a business has less than 30,000 in the 4 consecutive quarters, it can actually file or register for sales taxes. Why would it do this? Because it will have access to those credits that we've been talking about. To clarify this, think of it from the point of view of an everyday individual. So summer's coming up and I'm gonna have to buy myself an air conditioner, right? And that air conditioner is gonna be an expensive one. It's probably gonna cost $1,000. Now let's assume I'm in a province where there's only the GST and there's 5% on sales. I'm gonna have to end up paying that air conditioner $1,050. Now, a business who buys any type of product or service which is required for the business will be able to claim that money back. So by registering for sales taxes, if it needed that air conditioner for the business, it can get a refund for those $50 of sales taxes. To clarify what I was saying in the previous slides, let's use an example. Let's assume that Ms. Smith has a consulting business and she generates different types of sales. She generates $10,000 from consulting revenue, which equates to $500 of GST, 5% on the 10,000. She also has corporate tax return revenue of 5,000, which equates to $250 of GST. And she has the expenses that have been detailed further below. Staples office supplies, $200 worth. Tax software, $2,000 worth, a Baton Rouge meal with a client for $100, and she has her monthly BMW lease of $1,000. Here's our solution. This is basically showing what amounts and what details Miss Smith will have to provide to the government, to the CRA. She'll have to let them know what her total sales are. So in this case, it's the sum of the 10K and the 5K. The total GST that she's gonna have to pay back to the government is $750, which is the GST that was applied on the two aforementioned amounts of sales. And to that, she can reduce her GST amount by the ITCs, the amount of GST that she paid on her bills from her vendors. So the amount we have calculated is $152.50. And I need to provide a little bit more explanation because there's some particularities about her ITCs. So first of all, the office supplies, the full $10 was taken. The software, the full $100 were taken. But for meals and entertainment and for the vehicle monthly lease, the full amounts were not taken. And the reason is because for meals and entertainment, you can only claim 50% of those amounts. So 50% of the $5 is basically 2.5. And for vehicles, you cannot exceed the sales tax percentage on $800. So we had to limit our ITC to 5% of $800. And this gives her a net GST payable of $597.50. Now we're done with our 7 points or 7 questions, which I hope have provided an understanding of sales taxes. And we're going to move on some basic multiple choice questions, which I hope are going to further reinforce understanding of sales taxes. The first question is, which of the following is an exempt supply for sales tax purposes? A, furniture, B, insurance, or C, groceries? If you answered insurance, you are correct. Groceries would be deemed 0 rated. Second question, ABC Inc. and XYZ Inc. are registered for GST in Alberta. ABC Inc. purchased inventory from a manufacturer for a cost of $1,000. ABC sold the inventory to a retailer, XYZ, for $4,000. XYZ then sold the inventory to a customer for $6K. All amounts are before sales tax. Which of the following statements is true? And I'll let you go ahead and read and answer. If your answer was A, you're correct. The 150 is calculated by taking the 4K that ABC sold the goods for, less the 1,000 it paid for them, times 5%. The 100 that XYZ must remit is calculated by taking the 6,000 that it sold the goods for minus the 4,000 it paid for them and multiplying that amount by 5%. Okay, here's our third and final question. Jim Brown has set up a small business selling watches. The estimated sales for the first year of operations will never exceed $3,000 per quarter. Thus, Jim's business does not have to collect and remit GST to the CRA. What advantage could Jim have by registering the business for GST? If your answer is B, you are correct. So I saved this part of the presentation for last, which is basically showing you the different percentages for each of our Canadian provinces. So some provinces have lower sales taxes than others. One example of this is Alberta, where they only have the GST of 5%. There is no provincial rate. Whereas you have other provinces where sales taxes are higher, like in Quebec, where you have both the federal 5% and the provincial, or the QST, Quebec sales tax, of 9.97%, giving you a total of 14.975. Ontario has HST, which works similarly to the combination of GST and QST, just that it's calculated in one account or in one consolidated type of sales tax called harmonized sales tax. So the 8% at the provincial level and the 5% for a total of 13%. Next thing I want to show you is how we actually file and send the information. So when it's going to be time to provide the government with the relevant info, you can file your sales taxes online as long as you have the necessary access code using NetFile. If, for instance, you're in Alberta, or I believe in Ontario as well, and if you're in Quebec, it's done through the Revenue Quebec website under My Account, Business. And that's because in Quebec actually collects and pays the sales tax on behalf of the federal government. But if you choose not to do it online because you're not comfortable or for whatever reason, you'll be receiving a form in the mail that looks something like this. So this is, for instance, if you're in Quebec. If you're somewhere else, like say Alberta, it'll just say CRA or Revenue Canada, but essentially it's the same thing. There'll be information where they want specific items or boxes to be completed. So if we use our example from Ms. Smith, we're going to have to provide the government with information relating to total sales. So Ms. Smith had total sales of $15,000. So we would have to let the government know that we have 15K in this box. Now, obviously, I'm not able to but essentially you'd have to put that information in here. Then total GST, that's basically the GST that you collected from your customers, or basically the amount of GST that you charge to your customers. So the $750 would go in this box. And then the 152, those are the ITCs. So basically amount that's supposed to be refunded to you. So that will go in this box. And just to make it clear, $750 in here. And then you would have $152.50 in here. Of course, you'd be doing this by hand, but it's just to show you. And then the net amount between the two, which is $750 less $152, which equates to our $597.50. And now this information wouldn't be filled because in our example with Ms. Smith, we didn't have any QST, but if we did, this section here would be completed, and it will work in the same way as the information we completed in here, where we would report the QST that we collected, the ITRs, which is basically the equivalent of ITCs at a provincial level, and the net amount for QST. If you'd like to see videos on how to prepare sales taxes using QuickBooks software, please look out for other videos related to the subject on my channel. If you found this video useful, please don't forget to like and subscribe.